welcome back to the tutorial series. This is probably the last video in the series, if I can make it in one take. Today we'll be covering the overlay indicator, this one. It's probably the one that I'm the most proud of, given that it's taught me the most about all the more complicated features in TradingView Spine script, and took me a long time to get it right and do exactly what I wanted it to, and also the one that taught me the most in terms of horizontal ranges and stuff like that. So let's dive into it. We will be working on the Bitcoin chart for now, and let's add the overlay indicator. Let's give it a second to appear. TradingView seems to be a bit slower right now. Anytime now. Whenever you want, TradingView. Come on. There we go. Well, that took longer than usual. All right, so here we go. Let's dive into the settings. So as per usual, we have the color settings. Won't go over that again, but I'll put it in light mode since we're in light mode for now. And first what I'm going to do is explain this overlay tick rate. What does it mean? What does it do? Because it's very crucial and key to understand what this does, so you can kind of correctly interpret what the hell is happening once we start activating stuff, right? Let's for now just activate this so there's at least something on the screen. And let's go. Oh, there we go. All right, so if we read the tooltip, it says select overlay tick rate, set the update frequency for supply demand blocks and the automated range. The supply and demand blocks are the red and blue blocks that you see on the screen right now. Default 12 bars. Remember, if you haven't watched the previous video about sacred geometry, in the introduction beginning of the video I explain as to why I use a period of 12 and multiples thereof. If you haven't watched it, I definitely recommend watching that first, so you can understand as to why the number 12, and there should be a timestamp in the video that kind of jumps straight to that section where I talk about it. Dynamic tick rate automatically adjusts on low time frames to display high time frame structure. Daily time frame structure on the 2 hour, 4 hour, 6 hour, and 8 hour. 12 hour structure on the 1 hour. 4 hour structure on the 30 minute and 15 minute. 1 hour structure on the 5 minute. And then a final note, tick rate lock, which is the toggle basically, because the options that I previously mentioned are in here, right? So you have the default 12 and then the dynamic here at the bottom, and these are just handpicked if you want to use one of these. And then the note says tick rate lock will override the drop-down menu setting and keep tick rate locked at the default setting of 12 bars, right? So all this is doing is basically overriding whatever setting you set here. So let's say you want to set this to like this setting, nothing will change unless you untick this, because this is kind of acts like a lock, right? That's what it means. So what does it mean? Tick rate 12 and all that jazz. Let's go into it. So as you can see, basically what this overlay indicator does as a basic first step is that it tries to detect all the highs and lows that it can find, right? So we have a high here, a high there, a high there, there, and the blues are the lows, right? So here. The tick rate is similar to an RSI period or something like that, right? It refers to how many bars it counts. And the way these highs and lows work is that for one to be fully completed, it needs to complete the 12 bar period in this case, right? Because the setting is now set to 12, and you can see that this high is 12 bars long, right? Same goes for this one, right? 12 bars. Same goes for this one, 12 bars, right? And then if you actually measure this one, it's only 8. And the reason why is because, let me change the color of this to a bit darker. There we go. So at the 9th bar, which is this one, it closes above this level, right? So this high gets invalidated, if that makes sense, because there's a close that's higher than this one. So this high is not completed. It doesn't reach the 12 bar period, therefore it's kind of cuts off and then tries to create a new one, basically, right? If we then measure this one, it's also 8 bars, right? Because as we can see, the same thing happens again. This bar here closes higher above this high and therefore invalidates the previous one and tries to create a new one. And this one, since there's no bar that closes above, then this one is actually a completed high, right? So what the supply and demand SD blocks do is they detect all the highs and lows and keep track of which ones get interrupted before they reach the 12 bars or actually manage to create the full low with all the bars, no closes below or above, depending on if you're measuring a high or a low, and then creates a high or a low depending on that, right? So what it then also does is it takes, this is described, I think, in this one. Yeah, so if we read the tooltip on the supply and demand blocks, shows all highs, supply, and lows, demand, with their respective smallest candle body as a supply demand block. I have to give a shout out to Roman, thank him for this tip. And basically, let's see if we can find two that are, yeah, here we go. Right, so let's just for a moment focus on this high here and this low here, right? So we have a big candle upwards and then tiny candle close on the second candle, basically, right? So the high comes in here, and then this candle confirms the high because it closes lower than this one. The high is created and it will color the smallest candle of the two, right? Because the first candle that creates the high, if you put this on line chart, you can actually see, right? So the candle upwards is the one that creates the peak. And then this one confirms the peak by closing lower than the previous one. And that gives the second candle a smaller candle body than this one. But if you look at this low, it's actually inverse, right? If we kind of switch to line note, you can see that the low is here, which is the candle that is blue. But now, this time around, the second candle actually has a much higher, bigger candle body than the previous one. Yet, now it's the previous one. So the smallest is always the one that gets colored, right? So you get kind of like the tightest level of the two. Oops. You can, do it manually. If you draw a blue box here, then this level would have been bigger, obviously, right? I hope that makes sense. Yeah, so shout out to Roman for that tip, and as soon as he mentioned it, I instantly, adapted the code to do this. And yeah, we'll see in a bit as to why this is very, very useful and stuff like that. So one thing that I did forget to mention in all the other videos regarding the colors, the hard-coded themes like dark mode, light mode, and all the other colors that I use, they're usually, so ignoring the top part, if you take the big block of all the colors, they're usually either the third row or the fourth row of the colors. Those give you like those kind of nice pastel colored colors that aren't too contrasty, neither on white, neither on dark mode, basically. Yeah. So that's just a tiny detail that I forgot to mention in the other videos. So moving on. So what does the tick rate mean, right? So if we now unlock this so that we can actually use this menu to adjust it, what we can, for example, do is we take the 12 bars and then we multiply that by 2, which gives us 24 bars. And what you'll see when you do this is that stuff will shift. And the reason why is because now a high is not completed, or a low is not completed until it actually reaches 24 bars without a single candle closing above this particular high or this particular low, right? So now suddenly this low does not get completed, right? Because at the 20th bar, it actually falls through, closes below, and therefore this low is now invalidated. Now, the SD, so the supply and demand blocks, they don't really care about this. But as you'll see in when I cover the next section, which is the automatic range, is that that's when the tick rate really starts to matter, right? Because you're probably already noticed that when we switched, the whole kind of structure kind of shifted and changed between this, right? See if I can spot one that's very obvious. Yeah, for example, take a look at this high here. I'll put a, right? So right now it's set to 24. If we set it to default 12, suddenly there's a high here, right? And the reason is because of those 24 bars, right? So the tick rate, it's a reference to, if you're a gamer, then you probably know what tick rate means in terms of like an FPS shooter, first-person shooter. The servers, they usually have a tick rate that updates every, so few milliseconds or whatever it happens to be. And that's kind of why I got the term tick rate from. So another way to do this is, let's say you have one of these options. Let's, try another one, 48. It detects less and less highs and lows the higher this number is, right? Because the condition becomes more and more difficult to complete. And just to showcase what the tick rate does is that if you activate this, it will switch back to 12, like the default, even though the drop-down menu is still set at 4x. Right? And if you put it, the maximum is 144, by the way, because beyond that, PineScript TradingView starts to break down and start gives you errors. So I cannot go beyond this. But yeah, it's more than plenty, more than enough. Yeah, so if we put this on dynamic, like it said in the tooltip, it will automatically adjust on low time frames to display high time frame structure. Now this is an approximation, it's not perfect, but it attempts to show you what the range or the highs and lows look like on the lower time frame. Actually, we're gonna leave that for the automatic range because it's gonna be much more obvious than with the supply and demand bars. So I'll come back to that a little bit later. Yeah, so if we look at the options here for the supply and demand blocks, setting 2 is the opacity of the blocks, pretty straightforward. So you can change this to like 20, make them a bit more, like a bit thicker or a bit more faint, depending on what your preference is. And then the second setting is the SD block extension multiplier. So basically, you take the value that you set at the tick rate, which at default is 12, right, as you can measure, and then it's always multiplied by this value. And then in here it says value 0 extends to infinity, so it creates a heat map. I'll show that in a sec. Then value 1 is the tick rate length default, so it's just synchronized with the tick rate. And then if you go higher than 1, so anything between 2 and 20, it will multiply that number by the tick rate. Right? And then there's a little note at the end that says, on lower time frames, SD block extensions are capped by TradingView PineScript limitations and will not extend beyond 500 bars into the future. But the heat map is not affected by this issue. So let's put this, let's say, at 4. Right? So if we do this, then you'll see that all the blocks suddenly extend outwards. The tick rate length you can still see by the line itself, right? So this indicates to you that the tick rate is only up until here, and there's a multiplier of 4. So if we take this high, measure it from the beginning up until the end, it's 48 bars long, right? Makes sense? 12 times 4 is 48. And what this will do is, well, you will start to see all these levels, they begin to overlap, right? And that's actually quite interesting because all these, you know, failed lows that were attempted low but then all got invalidated, they start to overlap, right? So this tiny candle body starts to overlap with this one, and you create this. I hope you guys can see it on screen. Let me just increase the opacity a bit again, so it's probably a bit better. It creates an overlapping level between these two candles that's like sitting right here, right? And as you can see, like on the next drop, it just, the closes like fall exactly on that overlapping level. And then, yeah, obviously this candle is very big, so it's not as useful maybe. But yeah, and then here as well, so this candle low overlaps with this high, and it also creates a little bit of an area here. And yeah, you kind of get the idea of what it's doing, right? So it kind of keeps tracks of all these highs and lows, even if they're failed or not, or completed, and so on. And then, yeah, you can extend this all the way up until 20, pretty much. And you get like very long lines. Obviously, it starts tracking all the way back, right? But then the ones that are basically at the current price action, you cannot extend them beyond 500 bars into the future, because that's just a Pine script limitation. So keep that in mind, right? But anyway, you don't really need that too much anyway. And then if you put this value at 0, what will happen is the following. It will literally find all the highs and lows out of the entire history and just extend them all to infinity. And it looks like this, right? So now you actually create an entire heat map of all the highs and lows, and you can really start to see as to where price spent the most time on this particular time frame, which is the daily. Yeah, and you can kind of see that, yeah, there's like one here, one there, and then a couple of more here when this bottom was created, and that kind of creates this whole thick kind of area here, which is exactly the point, obviously, where this then rejects, and it's also the point where this following, you know, mini bull run since the beginning of the year kind of tops out exactly in the thickest part of the heat map, basically, right? Now this obviously changes a bit depending on the time frame that you are, right? For example, the 12-hour has a very, you know, thick zone here, and this is also exactly the zone where this low comes in. Yeah, so this is a neat kind of feature that was a happy coincidence once I started coding this, that when I did it, I was like, wow, this is actually really cool. So let's see, let's go back. So keep in mind that, as previously mentioned, the heat map, of course, is also affected by the tick rate itself. So if you change the tick rate again to, let's say, 72 in this case, it will switch and there will be less noise, essentially, because the conditions become harder and harder to satisfy. There will be less highs and lows detected, which leads to, you know, less and less levels, potentially more important levels, because you can see one like running through here that, you know, it comes from here probably. That seems like a very level point of control kind of thing, right? Because it interacts here and then there and then holds this as support, and kind of right now it's where it's rejecting at the moment. Yeah, so those are SD blocks. Let's put this back on default. We then have the signals. Let's put this at 2, for example, just to kind of go back to the default kind of settings. There's one extra option, which is a deviation signal, marked by a little X. And yeah, we'll kind of quickly go over what that means. So what do I count as a deviation in this case of an SD block, high, low level, whatever you want to call it, is which one is like kind of obvious? Like let's take, for example, this high. So a new high is created here, right? It comes in above this high, this high creates a block that's in between. So you get this box level basically, right? And a deviation means is that after creating a new high or low, if you look at the reverse, which we'll do in a sec, if the next candle, so this one, immediately after the new high closes below the block, so not the level, not this here, it needs to close in one step below the block itself, right? So that's counted as a deviation, right? It needs to close below this. Right, so if the candle had closed, like let's say here, like this, then it wouldn't have been counted as a deviation because it's not below the block itself, which you can see here, right? We get a new high, which is above this high, but the next close is here, right? For it to be a deviation, it would have to have closed below this red block here, right? If that makes sense. So yeah, if we, for example, look at the low that came in here, let's zoom this in a bit. Right? So the last attempt at a low that came in was here, very tiny body, candle body here. So that makes that the box level is pretty much here. Right? And then a new low comes in, and the next candle immediately closes above the candle body of the previous one, right? Hence, we get a signal deviation here. So that's how the deviation signals work. This doesn't work on candles that kind of meander through and take, let's say there's one candle that closes here, and then the next one kind of closes inside the candle body, and then the next one comes below, and then the next one goes. Like, that doesn't count, right? It has to do it in one single instantaneous move right after a new low comes in or a new high comes in. Yeah, so that's how those work. Another tiny detail is here. If you look at the top, so the first number, or actually let me take this arrow. The first number here, number 12, that's the tick rate. If you hover over it, it will also tell you overlay tick rate. Then we have the red number, which is the bar count since the last supply demand high, and the bar count since the last supply demand low, right? Now these numbers, they change as your cursor moves, but if your cursor is anywhere in the future, like not on historic price action, so it's just anywhere here, you can actually see that now, right now it says 2 and 6, right? And the reason why is because, well, we just got a new high and we're 2 candles in, right? So that's why right now the number is 2. And as this progresses, then those numbers go by. So it's kind of a way to keep track of when a new high or low is coming in, right? For example, we can see that the low is at 6, because if we count starting from the first candle that created the low to where we are now, that's 6 bars, right? So in essence, this low here is still unconfirmed in a way. Like I said, for the supply demand blocks, it doesn't matter, but for the automatic range, which we'll cover after this, it does matter, and quite a bit. So it's important to understand how this works, because they really synchronize well with each other when using them both at the same time. This low is essentially still sort of unconfirmed, because this is basically the cutoff point, right? So if we now get like a giant dump candle down, this blue number up at the top will reset, because now this low is invalidated, basically, right? But as long as price action just kind of stays over here or does whatever it wants to do, once it reaches this point, then it will be confirmed, and this number will reach 12, which is equal to the overlay tick rate, and then the low is kind of set. Right, I hope that makes sense. Let's see, anything else that I need to cover? Yeah, at the bottom, just like all the other indicators in the previous videos, at the bottom there is the alerts, and you have your supply and demand deviation high-low alerts, right? So you can, for this signal, if you want alerts for it, then you can use these two and then create your alerts. Right. Yeah, So let's put this at 1 because it's the default. Let's turn the opacity down a little bit so they're not too annoying. Deactivate them for now, and let's switch to the automatic range, which is something I'm quite proud of. Right, so let's see. We have the color options, obviously. Not much information there. Color 1, lower highs in the targets, higher lows in the targets for color 2. Color 3 is the automatic range color, so just the standard color. And also if you put this on monochrome, it will also follow this color. And color 4 is for the Fibonacci targets, which we'll add in a second. First we'll activate backtest, so it becomes a little bit easier to see, right? Because now it's only tracking the current range. So basically automatic range, what it means is it keeps track of all the horizontal ranges that it finds. If we activate backtest, it will actually show you all the entire history of the range. But essentially these ranges are based on the same highs and lows that the supply and demand blocks are finding, right? So it's the exact same. But here, what it's doing is that it waits for the confirmed ones. So it ignores the ones that do not get confirmed by the 12 tick rate. Only takes the ones that actually get fully completed. And then analyzes if it's a higher low or a lower low or a higher low or a lower high. And based on that is how the range kind of defines from which point to which point to take it. So one interesting kind of minor detail that is kind of cool is the following. So if you're in backtest mode, let me just kind of like position it so you can kind of see the difference. Right, so if we turn this off, it only shows you like the current range, right? So it's taking the current range from this low up until this high. This is the range, this is the mid range. We can see a nice little bounce there, right? But this is the last update that it did, essentially. If we turn then backtest back on, you'll see that the previous range was all the way from here to here, right? And given that you need to wait for that 12 bar confirmation, in this case, because we have the tick rate set to 12, right? So this number, what it means is that it needs to wait for those 12 bars to complete to update the range, right? And that's why you can see these tiny little markers here on the range high and on the range low, right? These are the little markers that tell you where the range gets updated. So if you want to see what the range looks like prior to any sort of point in the chart, what you can do with the replay tool is cut the range off. And we will do this, for example, on this one, right? So you have this one here. So here we're in this range, right? And then it gets updated to this range at this bar here. This bar is where the range updates to this one that we see currently here, right? So if you want to see what this range looked like at the time before the range updated, you cut it off like literally one bar before, or anywhere before. So if you cut it off here, you'll see that at the time this was happening, the range actually looked like this. And what it will tell you is that the bounce here is exactly a deviation of the range midpoint, right? This range from here to there. It got updated last here, and then it created the deviation below this point, basically, right? Below the mid-range, right? And then if we let it play, you see that instantly this is where the low completed. The low that was created as the deviation from the 50% range of the previous range got completed because it reached the 12 bar tick rate period, right, that we established. that where the updates comes in, and then it shifts and creates the new range, basically, right? I hope that kind of makes sense. You can like go back a bit further. Right? Let's say take this when the low of the year came in, and if you then just kind of let it play, you can kind of see how it behaves, right? So each time a high or low gets completed within the 12 tick rate period, then the range will shift and update. Right, you kind of get the idea. I hope that's clear enough. Then here's basically where it becomes important to kind of understand how the tick rate works, because if we now switch this to like a much higher number, like for example 72, you'll see that the range will look completely different, right? So yeah, see, I wouldn't recommend such a high number on the daily time frame because it's just not that useful. But I mean, the option is there for those that want it, right? And that is kind of why I included the option of dynamic. So what this does is if we put it on dynamic, on the daily, it will just use the, as you can see here, 12, the standard default value of 12. But if we then switch to the 4 hour, for example, you'll see that it has switched to 72. And if you kind of pay close attention, the range actually looks very similar to what it looks on the daily, right? Because the previous range was here, here, and then the high was there, and the mid-range is here, right? And then we had a new range created here. So if we now switch back to the daily, and we let the tick rate automatically adjust back to 12, you'll see that it's pretty much representing a decent approximation of the daily range, basically, right? Whoops, didn't mean to do that. Didn't mean to do that either. Let me activate this so I can delete the drawings. Right, so that's kind of what the tooltip explained that I mentioned previously, right? So it tells you daily time frame structure all the way down to the 2 hour. Then it displays the 12 hour structure on the 1 hour. So if we look at the 12 hour structure here, it looks a little bit different than the daily. But then if we switch to the 1 hour, it should be relatively a close approximation of the 12 hour range. Okay, right? It's not perfect because obviously there's more candles and more candle closes, and it kind of depends on how the price action looks on the lower time frame, but it should be pretty close to the actual time frame that it mentions in the tooltip, right? And you can see that starting from the 1 hour, you're basically at the limit. You're at 144. And yeah, so remember that if you haven't watched the previous video, check it out, because I explain as to why you use the time period or tick rate of 12, because it's just the most efficient numbers in terms of divisions related to time. Yeah, and then you can do this all the way down to the 5 minutes, right? And yeah, you'll see like big ranges appear. But basically what you're seeing here is the 1 hour range, but on a tick rate of 12, right? So we activate the lock, so it switches back to 12. Right, we can see now tick rate is back to 12. So this range should be pretty similar to a 5 minute range on the maximum value. I don't have photographic memory, so I can't tell, but you can, if you want to do this, you can compare them side by side or something like that, and yeah, it should be more or less what it describes, right? So that's how the dynamic works. Now, personally, I've used dynamic for quite a while, and then eventually kind of came back to using the default 12. So myself, most of the time, I just run it on 12 for any sort of time frame, because as you'll see in a second when I go over the different levels and signals and stuff that you can add to this, that, yeah, if you're trying to trade in a, you know, market structure, multi-time frame kind of way, this is just a very easy way to kind of go down the time frame. So we can just kind of do a quick example of it. Right, we're now interacting with the daily 50% of the previous range, because this is the current range, the new one, the latest one, but the previous range was this one, right? And the 50 line is right here, right? So as we can see, price is now currently interacting with the previous range 50, and if you kind of like pay attention or have been paying attention, this is something that is very common, right? So we create a new range, it confirms on this tiny thingy here, which means 12 bars since then, and it creates a big downtrend, and it deviates the 50% of the range, and then, you know, goes in the opposite direction. And then here again, right, you have the previous range, so the last high that was confirmed was here. Actually, it confirmed here, but yeah, this is the high. This is the range low, the 50% is here. The bounce happens right at the 50%. Right? Again, we have a downtrend. This is the last low compared to the high. This is the 50% line, rejection of the 50%, dump, right? So yeah, you can go all the way back and you'll see this over and over and over and over again. Like rejection of the 50, loses the range, and down it goes, right? 50%, deviation of the 50%. And yeah, you can go on and on and on, right? So you can use that same idea and then kind of just slowly start going down the time frames. And you'll kind of see where trend is at, right? So on the 12 hour, you can see that, hey, there were another 2 bounces of the 50 here, right? But we also know that on the daily, there is this 50 here, right? And it looks like we're struggling with it. Another bounce into the 50, downtrend, rejection 50, continuation, right? If we then, let's say, go to the 4 hour, we can take an even closer look. Again, you have a similar structure to the 12 hour, not exactly the same, but quite similar. Again, you have like a more detailed picture of that 50 bounce, and here as well. And I mean, it is literally almost like perfect to the dollar, right? It's astonishing how accurate this thing can be sometimes. One last detail about the range 50, because obviously it's quite easy for you to kind of determine what the levels of the high and the low are, because you can just like take a horizontal line, just, you know, stick it there, and it will give you the value of that line. So what I did, because for the mid-range you need a little bit more, a few more steps to actually determine what this level is. I've added it to the top, right? So automated range 50% price point, just like an MA, you can just track it, right? If you want to know this one, just keep your cursor in this area, so it kind of updates the number from your cursor basically to this range. If you want to know the current one, just keep your cursor like somewhere in the future, and it will give you the last number. As you see, it's 26,666.36, to be honest. Interesting number, but yeah, if you hold it here, it's, you know, it's basically there. Yes, what else? Yeah, we can go like even lower time frame if you want. You can use this pretty much on any time frame, especially on when you have it on default on 12. Again, like the 50%, yeah, it's here, it's the bounce here, right? Deviation of it, and then creates a move, rejects again, 50% of the next one, and just on and on and on. One interesting concept to kind of keep an eye on is just, this is a visual observation that I made as I was building this and getting familiar with it, is like, yeah, you get like a big uptrend, you get like this big range, right? Because the low has not been updated in a while. And then, yeah, the range kind of progresses. And what you'll suddenly see is that suddenly the lows start updating and you get this very tight little range here, right? And right after that breaks is you get the big move, right? So keep an eye out for those tiny compressed little ranges. here again, right? You have a tiny moment in time. There's like a tiny range here. And yeah, you get like a deviation down, but then you get like the big move up, right? And again, right, you have a big uptrend. And then right before the breakout, you get this tiny range. And then you get another explosive move to the upside, right? Here again, you can see how the 50% line is the point of control line, right? Because it holds, it then goes for one more retest of the new tiny range that's here, rejects the 50, and then, you know, creates the counter move back down. Again, here you get like a big dump, big range. Then finally it gets updated to a newer high, right? And then it gets another update for another newer high, which is a very tiny range. And yeah, as soon as it goes, boom, off it goes, right? So when you see those tiny ranges, time to pay attention, right? Again, you can see it here. This period was, you know, complete asinine because it was like pretty much flat for weeks and weeks on end. But yeah, at the end, you get this very tiny compressed range. Mid-range point gets rejected twice. As soon as the range breaks, booyah. And yeah, of course, this works, you know, all the way down to the 5 minute basically. Let's give it a second to load. What I usually do when I'm on the 5 minute and I'm using this, I actually put it online instead of a candle. It makes the structure much clearer, much cleaner. In terms of just tracking it, right? If you want to actually play some trades, you might actually want to have the wicks there to kind of determine where you want to put your stop and that kind of stuff. But generally, if I'm just kind of like keeping an eye on the market, then just having it online will it looks much cleaner. Yeah, right. So see how tight the range gets on the 5 minute here, right? Very tight range. You get a deviation below, reclaims, rejects the 50, and off it goes. The cool thing to do is combine it with the quantizer. If you guys have watched that video, which I hope you did, we can turn on the oscillator signals and the divergences and that kind of stuff. Right, then you can kind of see how you get this tiny range, you get like an oscillator momentum signal that bearish, you get like a bit of a pullback, you get the green signal, then you get the reclaim, and you have a nice entry here on the 50% line before it, you know, goes into a complete price discovery basically, right? 5 minute again, you get like a retest. By the way, if you, we'll see this in a second, but basically if you then subdivide this range into another half, look how the bounce comes in perfectly at the quarter range, right? So this is the upper half of the whole range, and if you take the quarter, then you get the perfect bounce here with the green oscillator signal here, and yeah, right? So yeah, combining those two together, like the overlay and the oscillator, is just it sometimes feels like cheating almost. It's not perfect, but yeah, once you kind of get used to interpreting both the oscillator signals and what points on the automatic range to look for, it becomes very interesting. Speaking of the quarter range, we'll start diving into the options that you can add to the automatic range to display more levels, right? So right now we have the high of the range, the low of the range, and the mid range. What we can do is we can add the range high and low wick, right? And we'll go back to the daily because it's just a bit cleaner of a chart. Everybody recognizes it. Let me just quickly put this on light mode too, so it's color synchronized. There we go. And let's go back to candles, right? So just to kind of save on resources and overall chart clutter, I decided that when in backtest mode, I do not add like the wicks and the range upper and lower quarter, right? So currently we're in this range, and you can see that the high is here. Let me zoom in a bit because it's a little bit faint, but yeah, there's a right. It's tracking this low and this high, right? That's the current range basically, and then we have the wick of the low here. There is a line here. I hope you guys can see it, right? And it's tracking this wick here, right? And then it also now we have a dashed line that is the upper quarter and the lower quarter, and then obviously the mid-range, which we already saw before, right? But as you can see, it only does that for the current range. So if we go into the settings and we deactivate backtest, you can see that more clearly probably, right? So there's a faint background going here that tells you like where the range is being calculated from, and you have the high and the low and so on and so on, right? But when you activate backtest, it will not do it for all the previous ones, right? So if you want to see one of the previous ones, you're gonna have to like use the replay tool and position it there and kind of see where it was at the time, right? But yeah, the main reason I do this is just to save resources and have the indicator be much more responsive and snappy than having like a whole bunch of lines everywhere. Also, in the beginning, I had the quarterly lines everywhere, and it just becomes very busy and very cluttered. So yeah, eventually I decided against it, and they're mostly important for the current price action anyway, right? Because as you can see, over the longer periods of time, eventually you tend to come back to the 50% range anyway. So yeah, the quarter range is an interesting range because it's, yeah, you can probably tell that it's here. So if we use the replay tool and we put it somewhere here, right? You can see that, you know, the previous rejection here came exactly at the quarter range, right? So it's quite an important range because you get the deviation here, then you get the retest here, then you lose it here, retest, deviation again, right? And yeah, it's definitely an important level, right? But yeah, as price action is happening at the time, you'll have these levels there, and you can use them obviously, and obviously you can see now that you can see the wicks level here and there as well, right? Since we're on the topic of the wicks anyway, let's quickly go over this setting, right? So in the automatic range section, you have 3 options here. OC means open and close, and then you have an option that's high and low. So basically candle bodies and candle wicks, right? So if we choose this option, what you'll see, pay attention to the range itself. It will now actually track the range from the wicks instead of the candle bodies, right? Works exactly the same way. Same structure, doesn't shift anything other than just instead of using candle bodies, it uses wicks. Now it's the way it detects the wicks, it's not perfect. Sometimes you'll have like a tiny bit of some candle, right? Because it keeps track of the wicks that happen around the time the high comes in, and yeah, I have to, you know, create a limit somewhere as to where it stops tracking the wicks and stuff. So yeah, sometimes you have one that's like a little bit higher, but more or less it should be good enough, right? It's not perfect. And personally, I also just I tend to prefer to run it in OC mode because it looks much nicer, especially when you're flipping back between line and candle charts. Yeah, so let's go back to this and then take the replay away and go to the next option. Right, so now the next option is the higher low and lower high. So I'll just add those. There you can see them, right? These synchronized with the bullish bearish color. In this case, since it's on indicator, it synchronizes with light mode. But yeah, so you have the highs in red, the lows in blue. If you put this on custom, then it will switch to these colors. Right? Easy enough. Yeah, so this leads me to explain like what is actually happening. So how is it actually calculating the range? Because maybe those of you that are familiar with market structure already kind of noticed this, but the range basically only updates when there is a higher high or lower low and ignores all the rest, right? That's why you see these in between pop up here and there, and the range doesn't actually update here because it's still barely, but it is a higher low compared to this one, right? If we go into the tooltip of the 3 settings that we have above, there's quite a bit there. It says automatic range settings, settings 1, AR level anchor mode, right? So that's what I just explained. OC, open, close, the candle bodies, HL, the highs and lows candle wicks. Setting 2, AR market structure mode. So that's this one. It says simple. Simple, which is the default setting, it only tracks higher highs and lower lows, but there's another mode that's complex, which tracks all the higher highs, higher lows, lower highs, and lower lows. So if we switch this to complex, you'll see the structure shift, because now the range gets updated on each individual one. There is one exception to this, and this is written in the tooltips, if I'm not mistaken. Yes. So the first note says AR market structure, complex mode, skips the first lower high or higher low after a higher high or lower low. And this is done to prevent it from displaying inaccurate targets in case the lower high or the higher low does not translate into a shift in trend direction. Yeah, a complicated way of saying basically that if you see here, there's a lower or a higher low that comes in, which the market updates or the structure updates, but then this one is ignored. Instead, it switches on this one, right? And that is because this is the first lower high that comes in after a higher high, right? Since I'm on it, let me just skip to the bottom and activate this. This is just a neat kind of quality of life feature, but you can activate this last option and it will actually display all the market structure that it finds. Right? Now the logic behind this is really quite complex. Like it took me a long time to get all this stuff right. And like I said, I'm really proud of it, of like how it came about and the final product looked. But at the time that I developed this, I started just with the higher highs and the lower lows, so the simple setting, right? Because it was much easier to code, and I kind of got used to it, and it was fine. And then eventually, as I got more confident in my skills, I decided to give it a go at the complex, so using all the highs and all the lows. And I had it on my chart for like 2-3 months once I kind of like had it working. And just kind of what I realized is that I started disliking it more and more the more time passed on. It makes it more noisy. It makes it more harder to read. The targets kind of get messed up sometimes. And yeah, I put it in here for now for those that kind of want to play around with it and see what it's like and if they like it or not. Personally, I very rarely, if ever, use it. So I would recommend for anybody who's new to this, just kind of leave it on simple. And yeah, it when left on simple, the 50% range is just, it's so powerful. It's in my opinion not worth switching it over. But if you're on like a very low time frame, 5-minute time frame or something, and you're scalping, and maybe this can be useful for you. So I left the option in there for now. And yeah, if in time I see that nobody's using it or something, then I might just kind of remove it altogether. But it is there if you want to play around with it for now. Yeah, and then the last option, just to cover it, is display time frames, right? So you select the highest time frame the AR is displayed on, this one. So if we're on the daily now and we say, well, the highest time frame I want to have this thing on is on the 4-hour, well, then it will disappear right now, right? You can do your own manual TA on the daily, for example, if that's something you prefer. I sometimes do that myself as well because the AR range is not perfect. So sometimes I just, want a particular level that's like a very important level on the daily or the weekly, and I don't want the automatic range to constantly be in my face. So yeah, you kind of like, I don't know, just draw a box somewhere like I'm interested in this level, for example, right? And it's kind of nice and clean. You don't need anything else because you're like literally just watching this happen here. But then if you switch to the 4-hour, then the range will display, right? That's basically what it does. So yeah, if you just want to use this for like you know, the very, very low time frame or something, then you can do that, and just have it hidden on all the other ones. There was one tiny last note before this that says deviation signals are locked to simple mode and will not adjust if complex is active, right? Because the logic behind complex is legit complex. I didn't go and bother to all the signals that we'll see in a second to code those in 2 different variations as well, because it creates quite a bit of a complex spider web of things and becomes hard to keep track of for me. And there's already like almost 1500 lines of code in this thing, so yeah, I really don't want to overdo it. And also it just keeps, the more I add, the slower and more sluggish it's gonna become. So yeah, I want to be very careful with adding stuff that's not really necessary, right? Right, so let's keep going with the different levels. Like I said, I recommend keeping it on simple, and then yeah, we have the next option here, which is the level market structure breaks. So this is kind of a signal in a way, and what it does is that it takes the higher low and lower high that have been basically broken, right? So if you know your market structure, you know, you get your trend, right? Let's say that this is your top, right? If you know your market structure, then you know that, you know, this would be a market structure break, right? Very kind of like a simple, come on, give me the line, there we go. Right? Very simple concept, but if you think about it, the market structure break always happens on a higher low, or if you draw the inverse of this, then it would be a lower high in this case, right? So if the market were to now reverse here and then do this, right, then this higher lower high, it would be the market structure break, right? So it's always a higher low or a lower high depending on in which direction it goes, right? So that is why those will always appear on a higher low or a lower high and not on higher highs or lower lows. Right, so the way this works is basically the last higher low that got broken, right? Because this is a level here, and on this candle particularly, it closed below, and this was considered a market structure break, hence the signal there. And it will keep this level active all the way until a new higher low is formed, right? So here the higher low is confirmed. We're on a 12 bar tick rate. So after 12 bars, this higher low is confirmed, and now it cuts off the market structure break here, right? This line. And what you'll see is, if you kind of zoom in a little bit and pay attention, then you can see that it's now tracking not this one anymore, because there's already another one, right? There's a higher low here. Come on, give me the thing, right? That is already confirmed because it has finished and there's no closes below it yet. And you can kind of see here there's like a faint equal symbol, so MSB, market structure break, with 2 arrows. It's a little bit faint. That indicates that, hey, if there is a candle close below this, then you have a new market structure break, and this symbol will flip from here to there, right? Now, what you can also see is there is no faint version of this one, and that is because it's the same level, right? So because since this market structure break here, right, because we have lower high, why is it, man, that's so annoying. Lower high, we create this level, there is a close above this lower high, which creates a market structure break, and hence this level is highlighted, but there has not been a lower high since, right? If anything, this is a higher high compared to this one, and this one seems to also be a higher high compared to this one. So first there needs to be, let's say this becomes a higher high, and then there needs to be some price action that, you know, creates a higher low, right? And then here we would see the faint version of this appear, and then if price does its thing and actually closes below above this level, which would then mean market structure break, then this is gonna shift and fill in the faint one, basically. Right? I hope that that makes sense. What we can do is, well, before I do that, I'll actually do this. So I hope that kind of makes sense. I mean, if you know your market structure, you should be pretty familiar with these concepts, right? So let's add the range one-to-one targets. So what this does is, for the current range, so right, that would be from here to there, which is this range, right? It fills in all the one-to-one targets. So if this is the full range, let me actually put this on linear. Linear, take a line, right? So this is a one-to-one from this range to here, right? You see this is one-to-one here, and then the thinner line is a one-to-one from the mid-range, basically, right? So it does this in both directions. And it gives you basically this range multiplied by 4 upwards and this range multiplied by 4 downwards, with all the mid-ranges in between as well, which I just noticed that is this. Yeah, there might be a tiny bug here. This needs to be a thin one, not a thick one. I'll fix that later. Will be updated in the next update then. Yeah, should be, you know, fairly straightforward. So yeah, one detail to note regarding this is that the automatic range will always consistently be in linear mode. It will never flip to logarithmic mode, even if you have your chart on logarithmic mode. And an easy way to kind of confirm and test this and test that these levels are actually accurate, I would recommend to not use the channel tool, because if you use the channel tool, let's say on this one here, you can see that it doesn't line up, right? So the mid-range of the channel tool is like a little bit lower than what the automatic range tells you that it is, but that's because the chart is on logarithmic, right? So if you put this on linear, then it actually lines up well, right? So either you can use this to your advantage and say like, hey, I'm going to use the automatic range to just display all the linear levels for me automatically, and I'll keep my chart on logarithmic and draw the logarithmic ones by hand, so I have both at the same time. So you can do that, for example, or in my case, I don't really use the logarithmic range levels anymore because I don't need them. I feel that the automatic range and doing it on linear is more than enough. Maybe except in like very concrete scenarios where you're tracking like a massive range like this, for example, right? Then maybe the logarithmic one might actually be better. Let's see. Yeah, see, so even if we take the Wicks, yeah, I mean, it's there, it's, you know, it doesn't really do it for me. But yeah, I do keep my chart on logarithmic because of the diagonals. I really like the diagonals a bit more on log. They seem to be a bit more useful given the time it takes to retest them and stuff. Yeah, so that's that. I hope that makes sense. Then we also have the golden ratio, the Fibonacci levels. Personally, I don't use them anymore because I feel that with the, as you can see, the 50% range and then the quarter ranges in between, they provide more than enough levels to use, and I just kind of, you know, don't use them anymore. But given how popular they are and how many traders like to use them, I've included them in here, so you can just activate these, and then it will also give you the golden ratio within the range, and then all the 1,618s and 2,618s and so on and so on. Yeah. Yes, and then what we can do now is, now you kind of basically see all the levels that the automatic range can give you, so we can kind of give a replay spin, and then you kind of see how this updates as it goes, right? So let's just let it run for a little bit. Right, and as the range shifts, it updates all the targets. was a little bit too fast there. It actually didn't reach it. Already updated the range before it got there. That's why. But yeah, it's kind of going very fast now because otherwise it's just gonna take forever. But yeah, you kind of get the idea of how this works, right? And yeah, like I said, it only displays the current range because otherwise it just becomes a laser fest on your chart and it becomes very, very cluttered and very hard to see what's actually going on. Right, so that pretty much covers all the settings. We can go over to the signals. Let's targets, we don't need those anymore. Market structure breaks, no, don't need those either. Higher lows, neither. There we go. This and then right. So we can add the deviations of the range high and the range low, which are indicated with tiny arrows, right? So basically what this is doing is as you have the current previous range, the range high, you get a candle close above. As soon as a candle closes back inside the range, then you get like a little arrow, right? Simple enough. Here it closes back above, closes back below, right? Comes for a deviation above. This candle again closes within this range that it's in, right? And then here again, right? You now see the updated range with this high, but keep in mind that this range didn't exist until this moment here, right? So for all intents and purposes, when this was happening, the range high was still here, right? And then this candle closes below that level. So that's why there's still two signals there, right? And if you want to confirm that, well, then you take the replay tool and you cut it off right before this little indicator here, and there you go, right? So you can see this is what it actually looked like at the time. Alrighty. And then we have the deviation of the mid-range. That is like this, a little bit harder to see because they're kind of tiny. But yeah, like I said, I don't want to clutter your charts too much. But yeah, same thing again. So this particular range here, it didn't exist until this candle happened here, right? So at the time, let's just do the replay tool for the sake of seeing what it does, right? There you get, so here we have a close that closes below the 50, and then right after we get a close that's above the 50, right? So deviation of the midpoint of the range, right? Makes sense, I hope. Yeah, let's take away the replay. Yes. And let's see, right? So another thing to note is that, again, for the sake of saving resources and have the indicator kind of load fast and not become too sluggish, when you're in backtest mode, it will show you all the deviations signals everywhere, right? Where it's detected. But as soon as you turn this off, it's only going to display the last one of each kind. Yes, I think so, right? So you only see the last deviation of the high, the last deviation upwards of the 50, and then somewhere here should be the last deviation of the range low. And yeah, I don't know where it is, but it should be somewhere. There's also the other version of this. Maybe here it is, right? Yeah. Right, because yeah, it saves a bunch of resources and makes everything just much snappier and cleaner to look at if you have your own kind of TA in the background, basically. How long is the recording? 1 hour and 10 minutes almost. Okay, I'm gonna just quickly go over the last little bits. Right, let's see. So we have the market breaks. And yeah, so let's go over the alerts. We had the two supply and demand deviation alerts. Those we covered already. For the AR, we have a bunch of alerts. So we have crossing the range high. Simple enough. Let's just turn on backtest for a second. Right? If this is happening and then you get any sort of interaction, so it's not necessarily close or anything, just as soon as the bar pierces through and interacts with the range high, then you get a notification, basically, right? It's kind of, hey, pay attention, because, you know, we might get like a close above, but then if it closes below, then, you know, it's sort of a deviation. It kind of just tells you, hey, pay attention. Same for the range low, same sort of mid-range, right? So anytime there's a bar that interacts with one of these levels, you can activate an alert and then have it so that, yeah. I would say have caution with doing this on like lower time frames, because yeah, you're gonna get like a machine gun of alerts, basically, because this happens all the time, right? But as you can see on the higher time frames, like daily or the 12-hour or the 4-hour, like these levels are very important, and usually they eventually produce like a pretty decent reaction. So that's really handy to kind of maybe activate these on the higher time frames to let you know, like, hey, we're actually interacting with like the daily 50% level, so maybe it's time to look for, you know, a good sniping entry position. And then two more alerts here, which are the market structure break new and the retest. So what does it mean? So, well, nothing's going to change because it's just the alert, but yeah. So if we take the market structure break, right, let's take the higher low in this case. If we look at the alerts, so new means when it triggers, basically, in the sense that right now we have a ghost one here, right? So if there's a candle that closes below, right, this is a new market structure break compared to the old one, right? So that alert will trigger when there's a close below this level, basically. And the retest is simply, well, this market structure break happened here with this candle, which is the first one that closed below. So now this market structure break is confirmed. Anytime there's a candle that interacts with this level, so here, 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 you know, all these candles that wick through it, right, they would all produce an alert like, hey, we're interacting with the market structure break levels. And kind of the reason as to why I left it on the interaction itself and not necessarily a close above or below is because these levels, as you'll, you know, hopefully eventually start playing around with the automated range and just kind of start like tracking it and paying attention to it. Let me see if I can find an interesting one on I think the 1 hour had it. Or did it shift already? Where was it? 4 hour maybe? I saw one recently, but I don't remember where it was. Was it lower to 15? Might have already shifted, so... well, I guess this is kind of good enough, right? Sometimes they get like very close to each other. And you can basically convert the range between both market structure breaks in another range with a 50%, basically, right? So you can kind of like do this, for example, right? And what you'll often see, I mean, actually here as well, right? They're kind of tight in a very small range together, right? That this is actually a pretty important level, to the extent that once you start playing with the replay tool and just kind of rewatching, especially on lower time frames where this happens obviously more often because of the fractal nature of the market, is that, yeah, the market will, you know, let's say it goes up from here and like does a whole thing and whatever, like it can take a long time, but usually these levels, they get retested, right? So after a long time, they might just kind of come back to this and, you know, create some sort of reaction of it. And basically you can see it with this level here, right? Like, look how consistently important this level has been ever since this market structure break happened, right? Because it held as resistance here, was a deviation, held as resistance again, then we blasted through it, but eventually we come back to it. Then you create another deviation here, another rejection here, right? So this level stays very important all throughout. And then when they're both together, it's even more significant of a level because yeah, they both kind of operate in the same way essentially, right? But yeah, if you have your your downtrend or whatever, and you create a market structure break like this. Oh, sorry, this is a bit too much. So you have a lower low, and then you create a higher high through. Then usually what you see is kind of like this, right? Because the market structure break is very often the point of retest, right? Before the trend actually shifts, right? So that's kind of like why I added those alerts along rent to kind of say very little, I suppose. But yeah, so yeah, these levels are just very important. If you know your market structure, you like I'm not saying anything new, I suppose. But for those that are a little bit newer, yeah, just keep that in mind. Market structure breaks are very important levels for long periods of time, especially on the higher time frames. Yeah, and then there's this one as well, AR new range update. So the idea behind this is that every time the range updates itself because the conditions are met, then you get an alert that hey, the range on the time frame, whichever time frame you create this alert on, will tell you hey, on the daily time frame there's a new range. The only thing is that I've tested this on the 5-minute charts, and I feel that it's bugging out sometimes, like sometimes it's not working. So I'm currently investigating as to why this is not exactly doing what it's supposed to. But yeah, if you have any trouble with it, then in a future update it's probably gonna get fixed. Yeah, I'm just kind of like currently busy recording the videos and stuff, so I don't have time to kind of investigate as to why this is failing. But yeah, it will be fixed in the future. So just keep that in mind. Yeah, so that pretty much covers most of it. Let's just kind of activate everything at the same time, I guess. Give this like a little bit of a, I don't know, like let's say a pretty decent extension, and then you can kind of get an idea of like how you can use this in combination, right, with the quantizer and everything kind of at once, right? So this is what it looked like when you have everything active. Let's see if we can find like a cool area to look at maybe a little bit of a lower time frame. Let's see. Yeah, I guess maybe this the latest kind of low works, right? So we catch this big dump after the whole kind of top came in. You get like this big oscillator signal. Momentum is dying out. You can also see it like going up really fast and then kind of dying out because the maximum value this can never reach is 100. So the closer it gets to 100, the less it's going to be able to to keep going basically. So yeah, that will indicate you when this is slowing down that yeah, the trend is kind of reaching its maximum kind of speed to the downside, if you will, and it will start either slowing down or whatever, right? You get like a RSI divergence here, and you can kind of see how the supply and demand levels kind of start putting in particular levels of interest, right? Because you have this tiny one here, which just barely makes it and immediately gets broken, but yet this level is something that this deviation kind of tries to hold as support, but eventually fails, right? Another observation is that when bottoms form, what you tend to see is like many of them like in quick succession, right? Over and over again, and they kind of start like stacking up on each other, and you kind of get this heat map kind of thing going on with all these levels. And what you're looking for is this type of behavior where you have like one or two in a row, and then you get like a breakdown, immediate reclaim with the deviation signal, which is also RSI divergence at the same time here, and it's also a deviation of the range, right? Because the range finally updates, as you can see here, because previous to this the range was up there, right? So now it updates finally here. You get a new 50% mid-range from the automatic range, which then creates also a new low. So this low here comes in, and then it creates a deviation of that low, right? It breaks and then immediately reclaims. Not only that, oh, sorry. this candle immediately engulfs the previous blocks, so that's why the deviation signal comes. And then you can see that it kind of starts holding this tiny one here as support. It's kind of hard to see because it's such a tiny candle, but it's there, right? And then you get the reaction out of that. It tries to hold this level of support, breaks down, comes back, and so on and so on and so on, right? But yeah, that's kind of like how you can use them both in tandem, basically. And as you can see, even though the range is kind of like updating, but the level is pretty much the same, so you have this entire like 50% range here, and I mean it's almost to the dollar where this reaction rejects, right? It's again that 50% range from top to bottom, right? Eventually, what you see is that this is the first. So you have a lower high compared to the previous range, then you get a higher high compared to this one. So that's why the range updates, right? Because we're in simple mode, so it only takes higher highs and lower lows into account to update the range. So when this higher high comes in, that's when the range gets updated. Then it creates another lower high right here, right? Another lower high which fails here. But then this is a higher high, right? This one compared to this one, which completes. Hence the range updates, and you get like this tiny new updated range with a 50% level that's right here, which is also the conglomeration of all these SD blocks here. So you can kind of already tell that like it's a very thick kind of level. You see that how price is rejecting that 50 as it tries to get above it. Then it goes for that one deviation, big one that just kind of liquidates all these lows, right? And then immediately starts reclaiming again, right? So yeah, there's a lot of signals here that you can kind of combine together, and then you get like these tiny 50% range deviations, right? Because these are now reclaiming this previous 50, right? Which runs all the way till here, because this 50 here doesn't appear until this candle comes in, right? So these candles are reclaiming the previous 50, right? Indicated by these tiny arrows, which you can have alerts for. And then from that point onward, you kind of know that, yeah, this is we're reclaiming this tiny range, and we're above the 50 of that range. And there's been like a deviation reclaim thing kind of going on, and then that's kind of like where the trend starts to shift, right? Yeah, and then you can kind of see how the combination of this block plus this block creates a tiny overlap here, right? Which then is also again after a retest of the 50 comes back up and is kind of like your first area of resistance, right? Before you create like an ascending triangle kind of thingy, and then it breaks out again to the next point, right? Yeah, so that's kind of how everything plays off of each other, right? And then you can add the oscillator signals, right? Because you had this beautiful retest of the 50 with the blue oscillator signal as well, right? There's not really a divergence here, but it's telling you that momentum is shifting, and yeah. And yeah, you can see that, for example, this little supply block here creates this level, which is also like a very important level because rejects, deviates, and then this wick spikes right into it before it carries on to the upside, right? So even the tiniest little supply block can actually be quite significant, right? The next bigger range that gets created after the range updates, it's the 50% is like more or less right on that level again, which then also creates the support where it bounces again, right? So yeah, I hope that that all kind of makes sense as to how you would combine all the signals together. And yeah, if you really want to go full degen on it and actually run all my 3 indicators at the same time, we can activate sacred geometry, put it on light mode so it's synchronized with the colors, and we activate the ribbon, for example, right? And then you get like another signal basically on top of everything. Right, so yeah, there's just a lot of options, and there's like a little bit for every style of trader, right? If you're more of a moving average kind of person, then maybe the sacred geometry in the ribbon and the wave is like more your style. You can do that. If you're more of a market structure kind of horizontal range kind of person like me, then the automatic range with the supply and demand blocks is probably more your style. I know that's definitely Roman's case as well. So thank you for teaching me all that stuff. Can't thank you enough. And yeah, I don't think there's much else to say. Video is about 1 hour 25 minutes again, so yeah, that kind of fits. Let me think if I'm forgetting anything. No, I think that's pretty much it. Yeah, if you guys have any questions, just leave a comment down below or something, or contact me if you know me in the Discord, and I'm really happy to help and kind of explain something if something's not totally clear. Yeah, I'll just let it run on a replay or something, just to kind of showcase how everything looks in real life, or like in real time. Yeah, another, like I mentioned in the other video, when I was doing the quantizer, I can potentially make another one of these for the overlay as well, so you have them like, you know, all neatly packed together. I will see. Maybe it will come in an update. I kind of have the logic already kind of laid out for it. It's just deactivated at the moment. But yeah, I could add that and create like another confluence tracker. If it's a popular feature and people like it, then I might just add it as well. Yeah. So I think it's especially handy for somebody who is sort of new to market structure and wants to learn about it, because this can just very easily visually identify kind of you know, the higher highs, the higher lows, and all that kind of jazz. And personally, I use it in a kind of a mix where I just do most of my basic kind of high time frame TA by hand. So on the daily or the 12-hour, I just kind of, you know, point out the levels that I'm interested in on the higher time frames, and then on the lower time frames, I don't really draw much by hand anymore, like very, very rarely, because the automatic range just pretty much does everything for me, or the supply demand blocks, depending on what I'm trying to do. Yeah, right now I'm starting to be pretty confident that the top here might be in, at least for the 4-hour, because as you can see, a bunch of stuff is going off. We had an oscillator signal here telling us that momentum is completely dying out. We can see here that in this momentum was the highest here, and since this time it's been just drifting down, and we're close to hitting the minimum. So if this keeps going down, we're going to see a minimum signal here, and maybe we get one more bounce up a little bit higher, maybe wick this again and create like a little bit of a divergence or something. Although there might actually be one already. Probably not getting detected because this is too low. Let's see if I put this at 10. And let's put this on backtest. Ah, there it is. Okay. Yeah, so there's already divergence there on the 4-hour as well. So we have divergence, we have bearish oscillator momentum, we have deviation of the range, and we have a deviation of an SD block. Yeah, and we're about to do kind of like create the second deviation, fall back into the previous range, which would kind of indicate us that if this actually falls back into the range and this kind of does its thing, we might kind of get something like this rejection of the frequency before we go back to the mid-range. And if that fails, then we go back to the lower part of the original range, right? Yeah, these things can kind of take time to play out. So, but yeah, it's starting to look a little bit ugly on the 4-hour, in my opinion. But we'll see. We'll see how it goes. All right, I think I'm gonna cut it there. 1.5 hours, more than long enough. Yeah, if you have access to it, I would just suggest kind of play around with the options, kind of figure out what works for you, what kind of, you know, is your vibe and what you like about it. Like I said, definitely maybe run some deep dive backtest on the range 50, because it's just, it is so consistent. I haven't actually run like percentages on it myself because I've been so busy just building this thing and getting it ready for a release. Yeah, but I'll probably fire up a spreadsheet at some point and just actually start recording all this data and figuring out like what the percentages are behind each of these kind of things, because yeah, the 50 range is just, it's amazing in my opinion. It's truly something spectacular, and you don't really notice it until you start playing around with the automatic range, in my opinion, because I mean, you notice it when you draw it manually in the sense that, hey, you know, these are important points, but you don't really notice how frequent it is when you see the entire history of the ranges as it goes, right? Because manually you might not draw all these ranges, right? Because you're just kind of tracking the current one and you're maybe comparing it to like the full range or whatever it happens to be. But if you see it consistently just as you go through history, let me just kind of deactivate all the signals for a sec, so it's not as or actually let's keep these, turn this off, and just keep the range and then turn off this as well. Right, so now you see all those tiny little arrows when it's interacting with the 50, right? And you can kind of see just how important this level is, right? Even before the big dump in May 21, right? It's again this deviation of the mid-range. Like I said, the compression of the range after it being, you know, no new lower low coming in all this time, right? The first lower low comes in here, which is the market structure break of this higher low here, right? That makes the range just kind of jump from all the way down here up here. You get this tight compression of the range, and that's kind of when the momentum shifts, right? So it's a very clear, clean visual indication of something changing. You have another like tight range here, and you can kind of see how the 50 just kind of constantly is the point of control, right? You have this spike up again, interacts with the 50 of the previous range, so on and so on and so on. Not just in crypto, by the way, just let me add this as a final note. If we go to the SPY, right? This is the COVID dump. And this is the high in 2021. The last range before the kind of compression happened is this one, right? The last little one. And yeah, you kind of start to see what I mean, right? So basically, when this range was updated here, you could technically, if you had this, already predict to a certain degree of certainty that the likely bottom was going to be here, or at least it was going to produce like the biggest reaction of all the attempts at creating a bottom, basically, right? And yeah, as it goes, again, like here it rejects the 50, right? Tries to hold the 50. When it loses it, it continues. Like even you could consider this sort of a deviation of the 50 again, or this 50 here, right? So you can kind of combine them together. You can kind of create like a box here or something, and it kind of tells you that that might be a level of interest. Finally, the bottom comes in, like I said, exactly on the 50 range of the COVID to the new high. And yeah, you can kind of see how it does the same thing, right? So yeah, if we're now looking at this range, right, it already kind of becomes quite obvious that after this range and this move, which is also again a deviation of the 50, right? If we now have the new range and the 50 is here, which puts the 25% like right around here. I'll actually throw a fib on that in a sec to show you how you can do this manually. Yeah, I would say chances are quite high that, you know, however long it takes, because it might not just be one candle down, it might, do something like this, but chances are pretty high that eventually we're gonna be down here at some point, right? Yeah, so if you want to do this manually, what you can do is take a fib tool, 150 and 0, then you can add the 25 and the 75 as well, and then you just kind of anchor it at let's put this on the line so we can actually marry it up with the actual range. There you go. But yeah, you can see that. And again, remember, you have to keep the fib on linear, not log, right? Or if you want to have both, then you can do the log on manually and have the automatic range do the linear for you. But yeah, you can kind of see that the 50% of the upper range is actually where we're kind of like, you know, struggling now. But yeah, if you didn't mean to do that, just want to take this, right? So if you take this range, for example, right, you can also see that this bounce here is actually the 25%, right? And the top here is the 75% of this section here. Potentially, if we update it to this, there might be something there. No, not really in this case, but yeah, it's pretty consistent. So yeah, this works on any market, not just crypto, right? Crypto is, you know, particularly efficient at it. We look at the Bitcoin bull run. Let's add the fib again. Right, so yeah, you kind of get the idea that here, see, right? So this pullback doesn't make it to the 50, but the reason why is because it actually bounces on the 75%, like perfectly, right? And then as you keep doing that, like, you know, it's not as clean as the previous one, but it's still some sort of a deviation of the 75%, right? So usually what the way I see it is that if you're in a strong uptrend or a strong downtrend, as long as either the 25% or the 50% is respected, then trend is likely to continue in the direction that's already going, right? So the 50% is really the point of control of the range. Like as soon as you lose that, you have to start getting worried, like here, and unless it's obviously a deviation of like a much bigger structure, basically, right? Because here you lose the 50 for like one candle, but then it immediately reclaims it, and then it tries to hold it, spikes into it, and then loses it again and reclaims it immediately again. Well, then, you know, yeah. So there's obviously nuance to it, but yeah, I think you guys get the idea. But yeah, this is really, I think it's a great tool if you want to, you know, deep dive ranges and learn more about them and do some backtesting on it and see what levels are important and so on and so on. And yeah, this can just speed up that process quite a lot, because yeah, you don't have to draw so much manually, basically. And yeah, like I said, it's not perfect, but it's a close enough kind of approximation, right? Because yeah, it kind of depends on how you set the tick rate and how you set various options as to where it selects the ranges. But by itself, yeah, you can definitely create any sort of strategy out of this, I reckon. I mean, I'm doing it myself, so I can guarantee you that you can create profitable strategies out of this, and especially when you combine it with the other stuff. Right, so this video is getting way too long. It's 1 hour 40 minutes almost. I think I'm gonna cut it here, and then yeah, any questions, like I said, just feel free to leave them in the comments, and I'll be happy to answer them. So yeah, signing off. Any future updates that I will do to any of these indicators, if this warrants an update of a tutorial of a new feature, or something has changed, or some options have changed that are like quite meaningful, then I'll do an update video and kind of go over what has changed in the newest updates. So until then, I'll see you guys next time, I guess. All right, bye-bye.